Yo, crazy start to the day. I know, right? Looking good. My QQQ calls are loving that. Big collapse off the triple B today. Markets open hella irrational to the upside. Things are looking pretty solid. That's a big inflation beat today, which I am liking seeing. Remember, inflation is just a reflection of the jobs market at this point. The more people go to work, the more stuff they make. Minutes. Everything's going today. That's good. And irrational to the upside is less devastating than irrational to the downside. But just remember, market can easily
solution to run your entire IT operation smoothly. Onboarding is fast and easy. No contracts, no commitments, no funny business. Just
right. Right, click that like button. Let's get ready to go. Go to rocketscooter.com. Get the free trial. Let's go. We're gonna show you how we're destroying market today. What's up, guys? Ooh, baby. I haven't even looked. I'm just excited to see that my thesis is definitely playing out. This is the more important of the numbers. While all your friends are like, CPI is coming down, blah, blah, blah. You're going to do another thing that's better than everyone else. You're going to come in here, you go to your market calendar, and you're going to say, Well, yes, CPI. This is what all the talking heads are going to say. Inflation is down. Inflation comes down as a reflection of the jobs market being better. Cost push inflation is cost of raw materials, labor, things like that. As long as labor is strong, competition brings prices down. FOMC doesn't control that. Here's the thing, though. This is what you want to look at. This is supporting the thesis. As the jobless claims do not tick down, this is a high probability of a 50 basis point cut in December, and Powell is going to likely taper off his aggressiveness on the rate hikes just for a degree, maybe for a quarter or half a year. And that is supporting the thesis, as this is the highest tick last two prints we've seen pretty much almost all year, with the exception of the start of April. So keep this in mind. That's part of the thesis, the bigger thesis, the jobs number, the threat to the stable market, as meaning that JP will have to come bailing stuff out. Irrational, right outside the door. VIX is definitely okay, so let's check that out. Let's get Rocket Scooter front and center. We go ahead and load up today. Positioning, make everything was under hedge pressure. I mean, that's what I'm saying. I've been in long swings for the last, I don't know how long, building along, swinging it through December. I did a monthly map to show why I got Google, QQQ, Apple. Those are my stocks going forward. No day trades. And now I get to wake up and say, well, my swings took off and I have a lot of capital in my pocket just to day trade in case I want to. A rational market, see, you see how we basically have kind of gone nowhere, sold off, come back to the trajectory we were on. You never really miss anything. You know, you're not going to get clean signals every day in a bear market. Bear market's going to be crazy and all over the place. So that's the whole point, is that if you have a thesis that's fundamental, you take an investment position. If you have a day trade that you see that's rational and makes sense, then you take it or you don't take it. Oh, how much am I up today? Let's see, hold on. I don't know. Again, my swings have been up or down. I remember I closed everything out. 14,700 today. Just on my swings. Again, it's a big position. It's like it's gone down equivalently that much in the last like week. Made back all the losses on it. So, and it's still going. But again, it's not straight gain. Remember, I've been in the swing position that's been kind of losing theta for the last 2 weeks anyways. So my first big swing position that I took, and let me just guys show you the irrational market route there. Please click that like button while you're here. Right out the door, S&P, all irrational, which basically means all of your indicators are going to be off or delayed. Remember, irrational market means choppy, delayed signals. All your technicals are going to fail because you had, like, pretend you had moving averages crossover, or like one of the weakest of all technical indicators, the MACD, things garbage. When they cross over, look what happens. Boom, you have this huge giant excursion, like 7 or 8 candles later. Your MACD is not going to reflect that, and it's going to be skewed off by hours for another cross. So, like, essentially this is where your indicators are going to cross over, jumped up, and then now you have this nice little bullish signal that just popped up and the market's already moved. So really, like, you're going to see that stuff like this makes your indicators no longer work. And even if it's Rocket Scooter or not Rocket Scooter stuff, all indicators tend to delay or not, or lose any of their effectiveness, right? Whenever you get irrational markets, the whole point of us showing you how to do that. So here are the old red lines that we had from our particular exercise last week. Right. There's the run length, gone. There's that impact, we tapped it, gone. There's that run length, gone. There's that impact, gone. Okay. So when they're gone, you delete them. We did a red line. Did you guys like the red line session yesterday? No liquidity map. Let's double check it really quick. Let me look really quick. Okay, it looks like something's going on with the app today, so we'll take a look at that in just a minute. Let me see if I get the classic app up. So everybody get your classic app out today. It looks like that is what's going on. We have to do manual liquidity maps today. My developers just told me that that our data provider is down today. Okay. Okay, so let's go ahead and do that. Let me go, while I'm waiting for them to do that, we're gonna have manual. All your data will come through, so make sure everybody tell everybody today, Team Jogging. Remember, hop in, let everybody know. Okay, so this is another bug that we have that they're working out. One little piece of the API that's for resilience didn't come in, and so the entire liquidity map calculation is behind that, which shouldn't be happening. You should be able to get your liquidity maps just like this. So come in here, get your classic app. I'm gonna walk you guys through how to do this. Again, market's irrational anyways, which is kind of good. Let's just have a lesson today on this. So everybody do me a favor, go. We're gonna show you how to do it manually, okay? Go to your everybody classic app, go back to rocketscooter.com. Let everybody know who's asking today. Just kind of show everyone that that's what we're going to be doing. The way that we're going to do this, it's not the app. Our data providers had an outage this morning, so it's really hard to explain why that is. Yeah. The data providers, something's failing on their end, so we're like waiting for that data to come in. The app's working fine. See, when Classic App works without liquidity map, it just means that the portion that calculates the liquidity map is waiting for data, and the data provider, a data provider that's never down, is down. So when you can go to, I'm with my glasses on to get serious here, you're gonna go to your Classic App and just do your liquidity maps manually. Their backend can handle the good news. Sometimes you get that happening on big catalyst days. Data providers go down. You'll notice that big nasty sell-off days in the market, you'll often see like your broker, like, will get all weird and their data gets clustered too. So here's how you do manual liquidity map, okay? We're gonna put on a manual chart like Thinkorswim, for instance. Everybody do me a favor, click that like button on the stream. Okay, you guys ready? Everybody got your classic app up? This is how it works. Okay, what I'm gonna do is put them side by side, and as soon as that data comes through, just it calculates liquidity maps. The only thing that's missing, so we're gonna manually do it today. Everybody open up like a SPY chart, super quick. So remember, we're outside of liquidity map, so there's nothing really to look at now. Let's go ahead and show you how to manually do it. We all ready? I'm just kind of making sure we're troubleshooting this thing. Okay. We're gonna go front and center, and we're gonna do them all manually today. And it's a good exercise because whenever you're trading, it also helps you understand why these things work the way they do. Do me a favor. Via Thinkorswim in your local Excel, there is to get the data. Oh, you mean for the calculation? Are we saying, like, is there a way? Our data provider is proprietary, but I'll let you know they're never down. They're literally never down. So it's just one thing that we pull from them that's down. And it's weird because it uncovered a bug. In our software, you're not supposed to, like, we have hedge pressures and walls and everything. It should still draw them. However, our coders are literal when it comes to, they're not traders, right? So their thought was when they designed this, because I overlooked it. And their thought is, well, if you don't have liquidity map, don't show anything. You don't need to show anything, right? No, you still need to show hedge pressure and walls. And they're like, well, why? You don't have the full calculation. Why do you need it? We thought just don't draw it. It gives a good signal to everybody that the calculation's not there, so you don't give them partial results. And when I think about it, I go, well, that is a logical reasoning from a non-trader. But then a trader would say, but we still need all the information we can get. So it's like a bug, but not really a bug. It was a design choice, which actually from a non-trader is probably the most optimal design choice, because they're like, well, we can save resources, and we don't have to show something that's incomplete and only show it when it's complete. And I'm like, oh, okay, that does make sense. But in reality, we're like, no, you still should show hedge pressure walls. It's just waiting for the funny thing is what it's waiting behind is something that calculates resilience. So resilience is not coming through, and they're calling them right now. So believe it or not, you're only hearing music. You can't hear me. Oh, thanks for letting me know. How about now? Does this does this lower the amount? Did the music turn off when I did this? Let me know if y'all can hear the music. See, I'm in serious mode. My glasses are on today. No music? You still hear it? Oh, okay. And how about... So odd. Yeah, I need to play with the settings here. Okay, cool. You guys ready to do some manual liquidity maps? Let's do it. I had this thing like turned down super low. Okay, is that better? Wait, the music just stopped? Music super low now? Okay. So I can't. All right, ready? Everybody get out a chart. We're going to manually show you how to do liquidity maps. It's actually be a lesson on the whole process. It's actually really fun. Okay. Okay, ready, guys? Okay. Okay, so we're having a discussion right now about literally optimizing the platform on what we're dealing with. So we're looking at the, we're gonna do the SPY today manually. Okay, ready, everybody? This is cool. All right, irrational market, things are nice and good. Let's double check all my positions really quick. I have Google, Apple. I mean, yeah, basically up $17,000, $18,000, jumping between the two. But again, I held some drawdown on those. Remember, I made 70K 2 weeks ago on that first write-up. Let me talk about my positions and we'll do some manual liquidity maps. Okay, we'll talk about the CPI and also the data going into this. Okay, so do me a favor. You guys want, we're gonna make some posts here and there about like our thesis and such. Okay. Ready, set, go. Music is very light. Okay. I'll have to play with this later. Okay, so I'm going to draw some walls. The first thing you do is you're going to go right here. Remember, when you are irrational, you don't even use liquidity maps anyway, so that's kind of good, right? So right here, we're going to type in SPY and do it first. You're going to type in the third Friday of the month, which is what it is alerting the platform to know that what your monthly expiration is. And you just click refresh. It'll give you hedge pressure and the walls. And we're going to go here and we're going to actually draw it out. And while we're here, let's draw a monthly map while we're at it. So I'm going to just put blocks from 385 and higher for today. And we're going to go to this Thursday and we'll do 385 and higher. So you see that today we are on the bull side of the market. Everybody, I want y'all to do me a favor. Type in chat what the letter is, and this is going to be very helpful because in an irrational market, right, you're not looking for anything other than looking at the bigger picture of the market. Your technical indicators on any small time frame will fail. Anything that you use, any technical indicators, algorithms are going to be delayed. The signals are going to be off. Like right now, all the things just cross. Imagine this, right? Let me teach you something. This is one thing to take away. Imagine that you had this nice, crazy, and I'm going to tell you guys this, right? The most, and I hate the dog on this because this has been the same message I've said for like 6 or 7 years. Any indicators that are based on an input of price and time, i.e. candles, which is price over time on a Cartesian scale or Cartesian system into an indicator. I'm going to show you something. The output is always going to try to predict price at time. That's it. Essentially, your technicals are always going to try to predict price in the future. An example is two things are crossing over, it's oversold, and somebody's supposed to buy, therefore price should go up at some point, right? So imagine that you have the weakest of all technical indicators, which is literally the MACD, because it takes a delayed moving average and a slower delayed moving average, puts them together and makes a little histogram off of again, there's a difference between the two. That the calculation essentially is looking at two delayed things and then making an inference and trying to predict the future by combining two delayed things of different delays. It just doesn't make any sense, right? So imagine that you're sitting here, right, all month on your whatever chart you're on, and you're literally your averages are like this, right? And I hate to say it, the MACD is the worst concoction that a trader puts on their chart. If you get rid of it, I promise you'll see no difference in your trading. So right here, everything's been going down. Clearly, they're going to be crossing over. Then all of a sudden, the candles go like this. And then now, 20 minutes later, it's sharply curved up like that. Like, I mean, the signal comes in way late, right? So the idea is that your technicals, when markets are irrational, will have this behavior. We can actually predict that your technicals will not work. So if you have a technical analysis type system, it doesn't know when to turn itself off. It doesn't know that when the S&P moves 27.5 points, that it should just remove itself from the chart. That's the whole point of a rational market. Does that make sense, everybody? I mean, if you were to put it on your chart, you'll see that it'll have delays like that. As a matter of fact, let's just do it right now. I know I never use these things anymore, and I hate to say that I'm not saying you shouldn't use them either, but in all honesty, I mean, I already want to throw up, right? So now you have this excursion of price, right? And the whole time you're sitting here all morning, and I'll show you what happens is when you can see how all the lines dance around while the price is active. You're not getting a clean signal. Here's your signal system. 1, 2, 3, 4, 5, 6 crossover signals, right? And so at the end of the day, you're going to have this massive excursion that's going to jolt your data off by a huge long shot. And again, anytime you see these things happen, it looks like in history that they've crossed right at the right time or before, but in reality, oh, here we go. There's the reset. All right, maybe the platform's back up. Let's double check. There's a newer version of the same API. Let me try that. Okay. Load up. So what happened is they released a new version of the API. Get ready to reset your platforms. Let's go. Thanks. Okay. Okay, so he's looking into seeing what's happening there. But what I was going to say is that what you'll get is just a massive excursion that you cannot see anything coming. This is based on a catalyst. So the catalyst could have gone either direction. After the fact, what happens is if they have like, I don't know, like a 9 or 26 period average, you're going to see that all of these lines are going to dance around over a very short period of time. Actually, that's an hour chart. My bad. Let me look at the 1 minute chart. I was on the wrong time frame here. So the point I'm saying is that you're going to get this massive excursion. On smaller time frames, these things are just too noisy and they don't give you anything applicable to use. Here's the big event, and then right here, there, look guys, there's your sell signal, right? And there's going up. On shorter time frames, your technicals will fail 100% of the time. That's the whole point of irrational markets. Do we all understand? I just want you guys to take that with you. When you use stuff like this, right, you're gonna get, like, if you're using some kind of system, it's like ding 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 ding, buy signal, sell signal, buy signal, and the market's going absolutely nowhere. You're just gonna burn through and waste commissions doing this, and then all of a sudden an event happens and you're sitting right here, and then you might be like, ooh, oversold. Let me go ahead and short the market from here. And yet we burst into bull territory. Automatically, the superiority of understanding positional risk does show its way through. A blending of these things is that if you were to have a ranking system that was to say what's the most important or stronger of all indicators, or an algorithm that you use out there, clearly the failure points of technical analysis are very much mirrored in this environment. Do we all see something? Can I get everybody in chat to tell me that you understand what I'm showing you? The smaller the time frame, the noisier the stuff is. Do we all understand that there's your sell signal as your MACD went negative and you are now shorting the market against essentially an arbitrary coin flip that really does nothing? That doesn't mean they're bad, but they're just not any good. I promise this stuff will never, ever, ever guide your trading and make you money. What makes you money is risk management, having a good fundamental thesis, and trading when it makes sense. Being a bull where it's bullish, being a bear when it's bearish, not off of weak math. TA is made so that people can sell you books in the 60s when they built these things. Like all of these, like the RSI came out in like the 60s or the 70s, right? It's like a 60-year-old technique, and it's not like it's bad, it's just not good. It was good when you looked at a chart after the fact at the end of the day, and the downside or the upside to like that idea is that, you know, you can tell people, you can show people great examples of when it works, and, you know, never have to trade. Like, you know, people that use this stuff, they don't ever trade live because they don't want you to see it live. Is anybody out there that's trying to sell you any kind of technical analysis or technical analysis system and they don't trade live? It's because they're masking the fact that it doesn't work live. The whole dog and pony show is that it only works after the fact, and they'll show you after the fact videos and things like that. If they don't trade live and let you see it live, there's a reason for that. Promise you. So understanding that the real magic in being a good trader is being a good trader. So I'm going to show you on a liquidity map today how this works. And again, the counter, as people started in the 80s saying this stuff doesn't work, the counter was like, well, let's use Confluence, right? Let's make like 9 different charts, and let's just like do a bunch of them. Let's do the same thing, but let's look at it in all different time frames, right? And of course, you can go, well, okay, the 5-minute, well, the signal was here on the 5-minute, also a sell signal. Wait, it's still going up. So when you have irrational markets, your technicals fail. Here is the proof. I'm actually going to clip this and I'm going to post this and put it at the very front of the channel so you can understand the philosophy of why you have been relying on essentially dumb. When I say dumb, not as like stupid, but dumb as in not smart, programmably smart. Dumb means it makes decisions to turn itself on or off. There's a sell signal here, yet the market's going up. Well, we could have told you that it's in bull territory, 385. So the idea is that your analysis methods will fail when markets are irrational. Do we all agree? If you don't agree, I can clarify. But I promise, if there's anybody that ever comes to you and says, hey, check out my trading system, and it's all indicators, right, that use just price, challenge them to trade live for like a week and show you how they use it. They won't do it. The whole reason they don't trade live is to support the idea that they only work after the fact in your sales pitch. Resilience is now working. We all have our liquidity maps coming through, but let's do a manual one anyways. Probably saying how to use a slide rule. Alan, you're not supposed to come in here and tell people how old you are. Remember, we had this rule between us that we're supposed to tell people that we're young. I know how to use a slide rule too. Don't break our cover, bro. All of us old engineers. Come on, man. I got Botox so I can look young. Now you're letting people know I'm in my 40s. Did you know I'm in my 40s, guys? Y'all didn't know that? Do I look like I'm in my 40s? Y'all didn't know that. But you thought, I bet you thought I was 39. Traded options over the phone unsuccessfully. That's pretty cool. Actually, wait, you traded options as a broker or you traded options as a retail person? Okay. So let me show you guys. Do we all understand in chat really quick, right? Everybody's saying yes. So the idea is that when you are irrational, these signals are way, way off. Look at this. You got a sell signal, another sell signal, And then now a buy signal. Here you go. Now your TA is telling you to buy way at the top, right? So the idea that these things do not work at all, period, when there's a catalyst, right? And so we have a video called Irrational Rules, and I promise if you guys all watch this video, promise, this will explain to you, these are 5 rules or markets are irrational. When markets are irrational, all of your indicators will be delayed and they will fail. Even resilience cannot survive. It's leading edge when markets are irrational. Resilience will typically only follow the market and be choppy. We've had lessons on this. So when markets are rational, all your indicators should be better and smoother. Ours, like resilience, can get hours ahead of price on the signal. So the idea is that when markets are irrational, you have to adopt the idea that nothing will make sense. The only thing that really makes sense when markets are rational will be liquidity map, potentially, but still you can't expect that power of irrationality won't break bull side, bear side, or hedge pressures. Positions are still there, but in an irrational market, people may be liquidating them rapidly. So looks like we now have our stuff. Let me remove this on my chart. I already feel dirty, like I need to go take a shower. Okay. Ugh. So I know I hate. Again, I've been talking. The technical analysis is a scam game since I started streaming. I started my first community on that specific mantra. That's the first thing we did. We all were abandoning TA back in 2015 when we started. And over the years, we've just preached the same message generically, right? We're not dogging on anybody specific. We've never targeted anybody specific. We never really just go in there and pick on people. People have a right to, sell and do whatever they want, but we have a right to educate as well. And my opinion is that open art technical analysis, open art, right? The people that invented this are long dead. People these days will scoop up all this open art stuff, mishmash it into a cake, and then package it, recolor it, and sell it to you like they invented it. And I'm dogging on some open art stuff, which has just been around for a while. And the new way of trading, people are using, positional analysis like we are, or options analysis, or order flow analysis like tape reading. Simply Sim, amazing at tape reading. Mel, amazing at reading the tape, understanding unusual flow. There are people out there that are really, really, really good at the modern day trading techniques. The algorithms run the show. You can't rely on paper charts and newspapers anymore. Okay. Matt with the big dick Google trade. Oh yeah, how much money did I make this? How much is my trade? Now again, I was probably down 15, 20K drawdown. But remember that 1 week, I made 70K. So I took my gains at the top. Let me share with you guys my trades actually. Yeah, I'm up like 22K on that trade. So I took about, like I said, I wasn't paying attention to it. I knew the drawdown was okay. Now let me walk you through what I did. I called my bottom thesis this particular day, right? And I'll walk you guys through it. Everybody, if you can, like that stream really quick. Give us some love. I'll walk you through my thesis on why I called the market was bottoming for the year. I have a tweet that shows that very thing. So I'll detail. I'll look sparkly against the white background. Oh, I don't have my overhead lights turned on. That's why. Calling for bottom in 2022 and a rally through mid-Jan, genuine buying. And we actually built this thesis in September. We talked about it through October. Then I finally made the post when I got the prints on the fundamental reasons. Today, the market's rallying on CPI, but the real fundamental reason for the rally, again, is the jobs data. We always talk about that, and it's going to be overlooked today by all the talking heads. Okay, so quickly, I know I'm jumping around a lot, but let's go ahead and do a quickie liquidity map. 385 is bull, 384 is bear, 383 is all bull down to the bottom. Let's go ahead and draw a monthly hedge pressure, and I want everybody to do this. Remember, we do this team jogging thing. 387 is here. I'm just going to draw hedge pressure. Okay. So when the market opens, I want you guys to do an opening liquidity map. Just tell me where the market opens at 9:30 in the morning, which side we're on, and I want to teach you how to do this manually. It's very simple how to do it manually. And all this came out pre-market. 9:30 is right here. It's 387. Okay, so if you're on the bull side, you write a B. If you're on the bear side, you write a BR. Everybody, I'm going to count to 3. You type which side we're on, and I'm going to circle it on the chart. Very quickly, you could do a liquidity map in like 10 seconds if you do this right. You don't even have to look at the chart to do it. I'm going to do a couple examples where I don't even look at the chart. As a matter of fact, my whole stance in technical analysis is gluing your brain to delayed signals. Is I can actually draw without a chart what I think the market's going to do without even ever looking at the price itself. There's a whole different process that we do here, which I hope you guys like. I'll teach it to you now. Let's just teach it. Okay, and then afterwards, make sure you guys go to the Rocket Scooter website. You can actually get our platform. And you can try it out for free. No credit card. There's no bait and switch, nothing. Just try it out. If you don't like it, you can cancel it. But you can at least get access to all of our training materials for a week for free, and you can learn everything. Like, the whole door is open. DD's positive, by the way. Just keep that in mind. Okay, everybody says B, right? If you open on the bull side, there's a B. So everyone write B. Man, there's like 100 people in here, and I saw 10 people right. Alex, you rode that? You rode that trade with that big dig Google trade? Baby, what's up, Alec? Let's go. Okay. B, and I want everybody, again, to go as fast as you can. I'm going to count to 5. Are we on above hedge pressure, below hedge pressure? Above is L, below is S. That is supposed to be an S. Okay, ready? 1, 2, 3, 4, 5, go! Above or below hedge pressure, which is blue. 1, 2, 3, 4, 5. See, you guys are all razor sharp. And these numbers come out the moment the market opens. Granted, the platform doesn't have a data outage, but the classic app is always your backup. So I want everybody to make sure in chat, as we're approaching our 1,000 member climb, we're in the 700s right now. Our first 1,000 members, right? You guys are grandfathering in $100 a month for our entire platform, our algorithm, everything, training, Discord, everything. Comes with that. If you guys want to grandfather in half off for life to learn what we do and learn positional risk, it's a whole new style of trading. If you've lost your faith in technical analysis, we'll show you how to decide when markets are rational and tell you when your indicators are going to fail, as I just proved to you this morning. We have 5 signals in that video that I sent, and when any of those 5 signals go off, all of your indicators will be delayed, choppy, and not work. Then we'll give you bad signals all day. Any irrational signal, any of those 5 that trigger, I don't try to take new trades, with the exception of enhancing my swing trades for the day. But I need to make sure that on the bull side break where there's no volatility, bull side breaks break into liquidity in a bear market. So I actually, in irrational markets, will take bull signals, as in my rule of thumb is I'll find any excuse to be a bull no matter what. Bull side irrationality tightens volatility, where trading is very simple. Entries are very simple to find. Not trading is always hard. Trading's extremely hard. Don't let me sell you the wrong idea. But the signal is simple because volatility is drying up, and you get right on the edge. There's a 387 hedge pressure that again would have triggered a stop loss, but you're back on the right side, and then it's bullish, right? So in irrational markets, volatility is just high, so you're going to get 30-point runs, 20-point. You just have to understand, when you break irrational on bear side, I usually sit out. Some of our guys chase the shorts, and they love those momentum plays, what I call the heart attack plays. I don't like to be committed all day to a volatile trade, but I have to understand that if I did buy the dip and I did stop out, I'm back in to trade again. So in irrational markets, you're going to be taking multiple stabs on your trades. Okay, so this is BNL. All right. UVXY is coming to a pivot. Let's get ready for that. The last one is, if hedge pressure is above monthly, if blue is greater than yellow, it is U. If blue is below yellow, it is D. Up or down. Quickly, quickly, quickly. U or D. Shorter term, monthly term. If the shorter term hedging is balanced higher than the longer term, it is U. Man, you guys are so good. Bull long up. All right, then you go to the liquidity map on a bull long up. We're gonna do a special session today in Zoom. How many? Okay, so those of you that are coming to the Zoom calls all week, can I get an honest review about how you have been loving the Zoom calls the last week? We have been investing a lot of time in training all this new batch. We had a huge influx of people come through here. People that saw the Trading Camp podcast, I've been on a couple other podcasts, and we're getting a lot of people coming here wanting to check out what it is we've invented. And we've been spending a lot of time daily training everybody on everything. Are you guys enjoying it? Like, how do you guys feel about this? Just this last week's sessions? They've been pretty good. We've done some culture shaping here, right? Okay, let's do me a favor. We're going to get in here and I'm going to... I don't want to hear like good or bad. Like, I want to hear what you guys really think. Absolute shit, Matt. Just kidding. Rocksteer's the greatest. No, they're definitely shitty. I mean, let's not lie. But did you have a good time while they were shitty? You know what's funny? My girlfriend... such an asshole to me all the time, and I love it. It's the first time in my life I've ever met somebody just like me, who like loves self-deprecating humor. That just like, she looks at me, she goes, "You're fat," and I go, "I know, man, you're gonna dump me." She's like, "Yeah, probably by the end of this week you should probably stop eating Skittles before you go to bed, fat ass." And I'm like, "You're right." So, you know, when you have that kind of relationship, it's hilarious and motivating at the same time. Keep the educational video short. Cool. The service is unmatched. Thank you. Very informative. Great secrets I would never learn without watching. Education is what I value the most. Raise your hands. You've sold out 75% of your long swings yesterday. Just me. Okay. Ooh, Sam, how far out did you do it? And let's do a monthly map and talk about some long swings while we're here. So when you get a BLU, what you're going to do is you're going to come to liquidity map and see the BLU has an opening price where we're going to mark really quick. Okay. Remember, positional risk has no time. The superiority of looking at time independent analysis is that I don't even need a chart. The technical analysis answer to this uncertainty and obscurity that you get in this data, where you have to look at multiple times, their answers look at multiple times, and then if you zoom far enough out, it's less sensitive to time. Well, that's like rudimentary mathematics. I can't believe people buy into that. Of course, if you zoom in, I mean, if you studied any kind of advanced mathematics, and that's the whole purpose behind like any kind of, I don't know, Fourier transform type analysis, where you take, or as a Fourier series, right? You can do these kind of things where you can assemble any kind of sine wave by a combination of multiple sine waves. The longer the period of those waves, the less sensitive it is to disturbances in the wave. So you could construct anything from a series of equations. And the funny part is that, and I'll just say this really quick and we'll go into the thing. If I were to use, if price does this and I were to use a 0 period moving averages, then I have price, okay? And then I'm gonna do like a different color, and I'm just gonna do like a 5 period moving average, it'll be slower. And a 10 period moving average, and a 40 period moving average, and so on, and so on, and so on, and so on. And then I take all my MACDs and I do like the longer period, the shorter period, shorter period, shorter period, 0. And then I took, I don't know, pick something, whatever. And I do all these things. And so I make a math series, right? And I go that I'm summing up from n equals 1 to infinity, where n is all possible math equations. I mean, anything, make up any equation. So infinite number of equations, right? That take price, that are of this function, price and time. All possible math equations that are of the structure, function, of price and time, which means you just take price and time. Essentially, candle data is price and time. You may have your moving averages looking at close price over time. You take all possible equations, 1 to infinity, sum of n equals 1 to infinity, n. Sum them all up. Over infinite time frame, infinite scale. You ultimately go this huge roundabout method, and the best average or the best analysis or indicator you can ever get. Funny part is, as your averages asymptotically, like say the price does this, right? Your average, you know, your period is 1 and actually 1/2 and 1/4 and 1/9 and 1/1,000,000th and 1/1,000,000,000th and 1/1,000,000,000,000th. Again, you go all the way approaching 0 from the right side. Ultimately, you could put infinite technical indicators on your chart, and the ultimate result of this equation is you circle back and land on price. It's like somebody didn't take a math class to understand that the ultimate goal of having infinity indicators of all combinations, ultimately the master indicator circles back and becomes price. It's a hilarious thing that if you add like a few extra things, you get a delay, but you add infinity things, you just come back on, and then you land on something that perfectly matches price and time. I mean, you know what I mean? Because the biggest problem people have is, well, there's a delay. So let's add some things to remove the delay. The delay in what? Signal? Or the matching of price? Of course there's a delay. You're averaging something over time. This, by definition, will be a delay. You can't get rid of it. So all the work to get rid of delay is ultimately circling back and just landing on price. You're literally showing people a very colorful representation of price, which, as I know that, I don't use any of that stuff and trade without it. So the idea is just that the market is hard. Get back to your beard. Yeah, my beard is a little better, right? Why is res negative? I'm going to double check this really quick. We had a data outage this morning, and I'm going to look into this. Resilience is what resilience is. So it's probably correct. If it's negative, it just means that the desire is to fill the gap to the downside. But remember, irrational markets, you throw everything out. Don't listen to any indicators anymore. The closest thing that you have in a rational market is just to not make any trades. But on a rational to the bull side, I'll still use liquidity map, but I have to understand I might have to enter and exit a bunch of times. Remember, irrational markets mean that these are going to all be delayed. All signals will be delayed. So what our stuff does that no one else does is it tells you to turn it off. So irrational market says don't use anything anymore. Markets are going to have a delay, and we have a rule that says anytime the S&P moves risk interval from the onset of a catalyst, your market is completely irrational. So when I see bull long up, let's say right here, right, I will still always trade a bull side no matter what, irrational or not irrational. But we don't teach people to chase irrational downside or chase irrational upside. You still need some kind of indication, even though you know that these are going to be loose overshooting pivots, right? And that's what our rules state in our Discord. And I'll show you guys how that works really quick. So BLU is opening price, hedge pressure support, back to opening price. There is that V-shaped move, and that is, again, when volatility dies out, even in an irrational burst to the upside, you will still see that this trade, open, bounce, back to open, is right here. Now there is, again, an overshoot, and you expect that when the market's irrational. We had a bunch of things flag that today. So do y'all see how that works? We're way outside of the DD bands, which is an irrational market. So you just have to understand, if you're day trading, which is why an advanced day trading course we have here, is how would you trade an irrational market? The first rule we have is get out and stay out, because you don't know what you're doing when you get started, and you might just chase the high, get scared out of the trade, chase the high again. Like, you just don't know how to do it. But once you get a grasp on it and understand that your pivots are going to be looser and you have to take more of a subjective approach, in irrational markets, all that matters is your fundamental thesis that doesn't care about today's immediate time frame. My fundamental thesis is still bullish, therefore I'll find every excuse to be a bull, and I'm willing to take a little more drawdown. How much? Well, it's irrational. It's really hard to say. Normally I stop one point lower on the S&P. And look, I would have stopped. Oh, damn, that sucks. Ooh, we're back to bull. Okay, let me get back in. Why? Because my bull thesis doesn't change from minute to minute like an indicator would tell me. I don't long, short, long, short. My bull thesis is, okay, I need a bull signal to go with it. I swing trade a portion of the portfolio. Boom, got the huge burst. Okay. offset all my losses this week plus some, and I'm still going higher. But my day trades now would be, okay, I should long here, and then I'll stop 1 point. Okay, it's irrational. Let me give myself a little bit more room, maybe 2 points. Again, there's no rule in an irrational market because the market has no rationality. Why make a rule? So it's more subjective than anything. And subjective would be, well, maybe hedge pressure can overshoot, maybe bull side can overshoot. So I know that in that overshoot, I either give myself maybe double the distance on my stop while that irrational is still turned on, or I just get out and get back in. I take a lot more smaller entries and multiple stabs at the trend, right? Okay. So in BLU, that's basically it. Upside targets, you're going to go click monthly, and we're going to do all 4 of our target seeking. If you guys watch this video, I promise you will learn more in this 7 or 8 minute video from me than you will learn sitting with me for hours. This is the recap, and I'm going to post a bunch of videos today as well. This right here is the recap of the 4 things I do to pick my price targets on the upside. Okay. So the first thing we do is we're going to map monthly mode with the same date on the S&P. We're going to see that at 388, there is no resistance on monthly mode. Okay, that's pretty interesting to see. So monthly wall, no resistance. Let's go to our daily chart. We're going to come in here and I'm going to mark all my gaps that haven't been filled. And we're just calling them gap fills. It's on the deep. Let's go to daily chart on SPY. They've already been marked. These are my gap fills here. And actually, I don't know why they're red, but let's go ahead and make them white. Gap fills are going to be my upper targets. If I don't find any walls, we're going to look to see where gaps get filled. And as you see, there is a gap. It already got filled actually last week. So anything here, the S&P has no resistance at all. At all, like at all that I can see. It's all hedging call territory right now. Gap gets filled over here. So this is an abundance of sellers, where that sell buffer is going to be where a wave of buyers will meet the wave of sellers. So what I like to do is, just because when you have large gap downs like this, typically your first resistance is always an impact red line or a half gap, right? Filling the gap is where I pick my price target. But one thing to take note of is that in the middle is a half gap. And we talked about yesterday with the impact red line video, is that the halfway point on that gap is also a resistance as well. It'll be a very strong one. And so I'm going to make sure that I have it marked just to know. The idea is that if the buying is strong enough, it will connect with the selling that created that wave down. Whatever created that wave down, if the buying's strong enough, it wants to find sellers, and buyers will meet each other right there. But the half gap is always a liquidity test. And so the first pivot, again, oops, go back where I was. Okay. So I'm going to mark it, and I'm going to make it like a dashed line. And then here's how you're going to manually look at the SPY. What's in my SPY upper target? Let me see if my QQQ calls are still kind of in the range of what I want to do, and repeat the process there. Okay. That irrational market check, I'm going to walk you guys through and show you how the irrational market will tell you that your indicators are going to be delayed and slow. All of your technicals, I don't care what they are. I don't care how they're displayed on a chart. Whether it's Elliott waves, whether it's, I don't know, fib, GAN, harmonic, whatever. Every single one of them will be delayed when it's irrational. The signals will be weird and off because the market makers have a hard time finding liquidity, which means finding out where buyers and sellers will be when the market's irrational. So here are the 5 checks that we do. So by the way, on my upper target in the S&P, I have nothing in the way. The only last thing that we can do is look at these yellow lines and red lines, which is part of, again, another technique we taught. We went over the video yesterday. We made the yellow line video and the red line video yesterday. What do you guys think of yellow line and red line, the technique? How to swing trade using Rocket Scooter? We have one called Monthly Maps. This is actually, let me delete all of this because this is from that video. Do this on the wrong chart. Let's just delete. Did y'all like the red line, yellow line videos? The new one? How'd y'all like it? Still trying to learn it? Okay. So speaking of red line, there's your red line resistance right there. Upper targets are always red lines. So today, picking price target, boom, that's a chance for me to start liquidating some position just on the day trade if I was in one, right? That red line was a target. It was sitting here from the other day. We also have a yellow line sitting right there at the top of that box. Let's kind of put it on the chart. Again, I keep history of these just because of demonstration. This chart's a little messy, but I use it just as my demonstration area so I can show and have history of them and go back and talk about them. So you have a yellow line right here, which is the upper target for the day, if that red line holds. So when you get to these levels, these are your upper targets. So let me go here. This is not the March contract. This is December. This is December. Okay, cool. Go ahead and put the name on the chart. Okay. Let's go ahead and mark our anchor point. One risk interval from anchor point. I don't know what I put this here for, but let's make this distance 27.5, unless I already did that. 63. Okay, so what I'm going to do is I'm going to draw a box of the risk interval distance. You can get these numbers in our Discord from our bot. Once a week, we publish these numbers here. They will be in the Rocket Scooter platform when we're done. S&P is 27.5. Just remember this, okay? You get the access to that in our Discord. So feel free to go there and join that. Let me delete some of these that are also in the way. So I'm going to draw a box of 27.5 distance, just arbitrarily right here on the thing. We're going to make it the distance. And I'm going to show you how to do the irrational flag. Now, we're about to program the actual platform to have all these rules in it. We had a project meeting this week about what we're doing for the rest of the year. And I'm going to squeeze this in so you guys get signals on the top of the platform and the right of the platform that say we're irrational and not. So 27.5, let's make this 40. Okay. Now when I click it just like this, I have a box. Now I'm going to go to what kind of chart? Everybody? Test, test, test. You have an IRL around 3910 from FOMC. Is that magical, right? Isn't that crazy, right? That's the one I had too, Alan. I just deleted it. Red line. So they're called illiquidity pivots. We just, and so people usually are like, what's that mean? The video will tell you what it means. We just call them yellow line and red line because the lines are red and yellow. So what kind of chart do we go to? You're new here. Can we use the app for indices like Dow and FX? Yeah, you can. For Forex, we don't have anything for Forex yet, but anything that is an ETF, a stock, or anything that has options, we can look at. So Forex is one of the things we don't have, but in general, I mean, everything else we do. So, but feel free to check it out for a week. So if everybody goes to the Rocket Scooter site, you can check it out for a week and just show you guys how it works. Wait, is there a new yellow line, red line video, Mark? We filmed it yesterday, so it'll be released today. Which chart do we go to look at? Hang tight for just a second. I'm actually going on a bathroom break, so I'll be right back. I'll be right back, one second. Big chart. Why do I hear myself talking? Is my own video playing somewhere? Was I? Hear my own sound. Do y'all hear me? I hear myself somewhere. Where do I have my own video playing? It's so weird. I hear myself. Oh, there it was. Oh, because I clicked on it to link it to you guys. I was wondering what was going on there. All right, cool. Let's get it back. It's been playing the entire time. Well, there you go. You guys can watch the, okay. Y'all can watch the video. One second. Let me get the liquidity map back up. Okay, let's do some liquidity map stuff. And I'll finish talking about my price targets on SPY. So, and we'll talk about the fundamental portion of the thesis as well. And we're talking about why I'm long the market, right? Everyone else was bearish. Why am I long? And again, why am I not? I'm going to be cautious today, of course. Right? Oh, let's get back. I need to buy YouTube Premium so I don't have to hear ads while we're playing music. What happens is when you put the copyright free music and then the playlist ends, it recommends a playlist with copyrighted music. So that's a problem. Okay, let's get back on the screen. Okay, so you go to a tick chart, right? We're going to just go through really quick. And on the onset of the anchor, its onset of the event, you measure from the anchor point. The little box I drew of 27.5, okay? Right here. And that number will change every week. It's an exploit in the futures market. So you need to go exactly that moment in time that impact happened. So we had a downward tick and then an upward blast. So the upward blast is going to start from right here at the bottom. This is a tick chart. We opened, we went down, and just moved straight up from there. From this point in time, the market is 100% irrational on this catalyst. So I'm just going to mark it really quick. And I think I've already done it, or I put a line there from earlier in the training session. And it's just one RI from the anchor point, which should be right here. I don't know what this is. Oh, that's also left over from the video. Okay. So anything above here, the market is irrational on the catalyst. Not only that, we're irrational on the DD band as well. So both of these things flagged irrational. So even so, no matter what, anything above here is irrational. So logically, what makes our stuff extremely superior to all things technical analysis is our platform would have a signal exactly right here that says, turn everything off. That's the whole point. And so turn everything off just means you're kind of just winging it at that point. Your signals are going to be delayed. So right here, we already got that indication that signals were delayed, right? And again, back to the whole, let's go ahead and put our, like, I don't know, I'm going to add a bunch of these things on here. And it just to prove to you that your signals are delayed. This is kind of a cool lesson. I don't know, pick some of your favorites. MACDs, RSI, right? So even do volume profile. Even show volume profile may not be. Let's do TDM squeeze because that's also like weird like that. Same thing. It just doesn't shut itself off. Everybody give me your favorite indicators and I'll put them in here really quick. Why is there always a fake out move? Liquidity grabs. It's like this, right? In an illiquid market, you've bought and a market maker sold. In a liquid market, you've sold and market makers bought. They need to raise and lower price to find buyers and sellers. Well, they're going to raise price against the people that are trading against them. And that is the buyer and seller in illiquid market. So illiquidity pivots. The fake out move is to squeeze out the people trading against them. If I need to find buyers, I can either lower price and hope they step in, or I can raise price and squeeze out the shorts in that illiquid market who are shorting against me, which is what they do. That's the fake out. Now, anything with volume will be particularly stronger than something without volume. Just something that's price and time alone is not gonna be. It's just the worst of all of them. Things with volume will have a little bit more, I guess, resiliency. but you're still going to see some of these issues here. Okay, I add like a couple more. Super trend, what is that? Name a thing here? They don't have it. Okay. TPO. That. Okay. On balance mode. Okay. Let's get to it. Just kidding. All right, pick your time frame. Let's say that we're day trading, right? Let's do an intraday chart. Let's do like an average, like a 5-minute chart. Okay. A lot of times what most of these will tell you is what's already happened when it's happened, right? I know the TTM squeeze. I remember reading about it. It's anytime you have that compression of the Keltner channels and the Bollinger Bands, you squeeze, and of course, whichever way the histogram is pointing, it's typically the way that you're supposed to enter on the indicator, which again, the smaller the time frames, the choppier it is. And then right before that event, it's like you should long, you should short, and now we're in the squeeze portion. Yep, there you go. You should have longed. Well, I mean, the candle could have gone either way, and so this 100% predicted nothing. As a matter of fact, it signaled that you were squeezing for the longest time, and that was an entry point. But also here, you're squeezing the longest way, and it was an entry point as well, right? So you're on, you're off, and even here, you're squeezing the entire time. It's a buy signal, sell signal, buy signal, sell signal, buy signal, sell signal. Have fun with this, with your family's inheritance. Okay. No, thank you. And again, the catalyst just reflects what can happen, and you go sell this to somebody after the fact. You're going to say, hey, look at this, guys. You're to buy here, you made all this money. Wow, that's so cool, man. Right. So the idea is that it's just price. All this is price that goes into here, and the shape of price. And I say the shape, like how far it's moved and whatever. I think that's how it works, right? The compression comes when it's green, and there's your signal. And after the fact, it looks great. So on balance volume, I actually have no idea what this is. You'll have to tell me. But again, it reflects and responds to what you see. There is no predictability to that. RSI, completely oversold here. And you decide to short, and you, again, we're upside down 50 more points while it's oversold. How oversold can it be? Well, infinitely oversold. I mean, any time frame, you'll see the market be, or overbought, sorry. It can be overbought and oversold many times. Here we go, right? Here's your RSI failure. Nice little rally on the SPY. Well, let me short it right here at 382, but at 390, 80 points higher. Look, okay, I'm going to short. Okay, I'm going to short some more. Okay, I'm going to short some more. Okay, phew. All right, it's coming back in territory. My short's certainly going to play out. Wait, what? 9 false signals against a rally. When markets are irrational, these things don't work, and there's your proof. Make sense? You will get weird, false, fake signals outside the irrational market. Flag. Easy as that. Beetlejuice when he gets his head shrunk. Yeah, that's funny. Well, looks like I'm next in line. I remember that when I was a kid. That was like one of my favorite movies. His head shrinking. Hey, what's up? Ooh, come in. Ooh. And his head's like getting really small. Using the RSI for swing trades? Absolutely not. Because when you're looking for swing trades, you want to be swinging on a fundamental thesis, right? The RSI is too finicky, and all it does is show you when you have lower lows and higher highs, essentially what the math is showing you. The RSI is going higher. Your candles are closing at higher highs, if you think of it like that. It just means the market's stronger. But the market could be stronger because it's a reversal. The market could be stronger because it's just squeezed overbought. So the market makers are raising price because there's genuine buying. There's no reversal against the bull market on a signal that's technical using price only. If the market jumped higher on a squeeze and it was quote unquote overbought, or we squeeze everyone out and there were no buyers, then it'll collapse in. So you need a way to determine, are you getting bulls come in or not? Or are you just squeezing out shorts? And you can't do that. That's the next kind of segue, is that you can't really understand the mechanism. You need to find buyers. If you lower price, buyers will naturally step in and enter trades to buy. If you raise price really quickly, people will exit trades to buy by covering shorts. They're exiting trades against you, the market maker, who they're betting against you. If you squeeze them out, you won the bet and found your buyers. Now you sacrifice liquidity because people exit the market, and you got to come in and fulfill that duty, right, as fewer people trade. But that's always the option, is to squeeze out the weaker trade first, than to try to find a fundamental buyer last. So in the longer term, dealers are slowly lowering their price over the longer term to attract the buyers. That's what a bear market is. But in the shorter term, the raising of price is mostly shorts covering than anything else. We'll do a swing trade. We'll film it right now. We'll go to our Zoom and we'll do a film there for the swing trades. We'll do monthly map today. Okay, so your volume profile, let's go ahead. Remember, as you see, none of these things are giving on any time frame much of an indication of anything. As a matter of fact, this right here, as the market's slowly drifting up, there's quote unquote buy signal on a MACD, right? And maybe you got lucky and maybe you trained yourself that, oh, that works. But you know, the move is on a catalyst alone and nobody can forecast that output. Right here, again, the signal comes because the candle was so strong. So none of these things are giving you any lead off of that to happen. And also telling you right now, this one is telling you it's a sell signal. This one is telling you it's a buy signal, or it's not a sell signal yet, right? As the histogram is getting higher, it's a sell signal. Or no, sorry, it's not a sell signal. It's definitely stronger. This one, again, going higher, definitely stronger. As you see, this is very much similar to a MACD in that it goes down when price goes down, and goes up when price goes up. And again, candles and price themselves go down when price goes up. And this price reverses first faster than this signal does. So all of these are delayed signal, right? Price is going up, and then, like, you know, 5 hours later, the signal's like, oh, hey, guess what? Price is going up, guys. And so, here we go. Price is going up, and how many hours later? 9 hours later, your MACD is telling you, well, price is going up, so maybe you should long. That catalyst's gonna go on that way. The signal's delayed, and it doesn't even, it just looks good after the fact, and that's the whole point. So going forward, even your volume, while there is resistances here. Again, I don't know how far back this is looking because I didn't modify it. But in all honesty, anything with volume will definitely be stronger. You see that there is volume from the past here and here over whatever period I'm looking at. So let's go ahead and remove all of this stuff before I go blind. You only need at best like one indicator, maybe two. And one of them must have volume, period. If you use our stuff with anything with volume, you're going to be at volume profile, and VWAP is probably one of the best things you have. VWAP, you might tap the VWAP a lot because market's going to be sporadically looking for where volume will be. But if you want the purest sense without any indication, see there's a VWAP and a VWAP. Anything with volume is going to be superior. And what our stuff actually does is predicts where volume will be. That's the whole point. We took the strongest idea is that predicting volume is predicting where traders will be. And so it means when I buy or sell, I just need to make sure there are buyers or sellers near me. And that's it. So you'll see that the volume indicators are much stronger. Now, they're not necessarily going to predict the outcome. That's one thing you have to notice as well. When you get to your point of control, which I guess that's what this is showing on this 5-minute chart for the intraday, it's not like that's resistance, let's go ahead and sell, right? Normally, classically, you'll think there's a resistance there, let me sell. And again, as I said, irrational markets do not care about what's going on in the past. When markets are irrational, the dealers have lost sight on where buyers and sellers can be. And that's the whole point. So if they don't know where buyers or sellers can be, even knowing where that highest volume is, it doesn't matter. There are people buying despite that now off of this fundamental change and the two data points we got. So when markets are irrational, even volume profile, which is probably one of the strongest of all the indicators, still can't produce a successful pivot. Because it's based on yesterday's volume and last week's volume and whatever. It's based on historic volume where people were in the past. So what we corrected was this is where people are now this morning. This is their positions today. VWAP is going to be a self-correcting real-time indicator, which is going to be really good as well for giving you pivots. But even so, the VWAP will also have its limitations based on the period at which you give it. But it's still a great indicator. Those are two of the only ones I'll say are worth a damn. But even so, let's clean up. Delete it. Okay, so here are the tricks. You wake up in the morning. Let's get Rocket Scooter front and center. Actually, let me do my irrational tricks first. Okay. Every day you wake up, you do 5 things. In pre-market, you can check 2 of them. The market opens outside of these bands. This indicator will be in your Rocket Scooter platform very, 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 very soon, or you can get it from our community. If you are a lifetime member, we'll hand you like a Thinkorswim. And I think somebody made a TradingView version too. Essentially, we show you how to manually do this every night. When the market closes, you can prepare for the next day. You just draw these lines yourself, or you measure them. If you open outside the band on any of the 3 indices, irrational flag, check, market's done. Anytime the VIX moves more than this distance in a single session, I'm going to measure it right here. This is an irrational check too. Any one of these things flag, your indicators will fail. All of them will. I promise they will. So if VIX moves more than this distance, also irrational. It didn't happen, but these things did. So those 2 are checked. One of them is irrational. Now we're going to Rocket Scooter front and center in the morning. It'll actually tell me the rest of the things I need to know. Let's go through SPY or QQQ. The next thing we look for is hedge pressure breaks. Anytime you're on below, you go above, or you're opening above and you go below, that's irrational as well. Anchor VWAP. Everything is going to have a similar effect. You're going to have, by the way, my CPU is starting to bog down because of all the encoders. This is my own CPU. I need to finish building my supercomputer. I locked my CPU up because I'm running so much stuff right now. Got 7 screens open. My computer's getting a little slower, and I have like a state-of-the-art computer already. Anytime you have a hedge pressure break, irrational. So of the 3 signs, we have 2 that are irrational. Any of the indices will flag it. QQQ is one of them. Anytime you break through it one way or the other, causes a gamma squeeze with unusual volume. SPY, same thing. So of the 3 of them, 2 of them have flagged irrational. The other one is a catalyst, which we had pre-market. We measured that today. I showed you this morning. This also flagged. But this flagged after this one did. So of the 4 signals, 3 of them are irrational. The last one we look at is VIX. It takes about 10 seconds to do this, and the video literally says it takes 10 seconds to do this. The pre-market ones you can do pre-market, especially when CPI comes out in the morning. You can get ready and arm yourself to do that before the market starts. And then here, you have a hedge pressure break in VIX as well. Not only that, VIX hit a call wall and also was irrational, but then tucked back in here. So VIX is not flagging anything other than a hedge pressure break. You have hedge pressure break, catalyst, DD. 3 of the 5 signals are irrational, means everything's going to be delayed, suck, nothing. Nothing's going to work. VIX is in collapse mode right now, which is fantastic. I like what I'm seeing. And so irrational markets, essentially the way that it works is if you go to the Discord, we'll tell you exactly how to read them. In our Discord, all the rules are here. We exploit rational markets. And rational markets, our stuff is just on point with what it's trying to tell you. Rational means market makers can easily find liquidity and price movement, ebbs and flows nicely. Your signals will all be good. Your technicals might actually work better. Pivots from our calculations are usually razor sharp, and pivots from VWAPs and other things will also be razor sharp. Resilience becomes more of a leading indicator, meaning that the stocks will move first and the index will likely track it. You don't have unusual activity in the index preceding the stock move. But sometimes the market can become irrational. It means the market makers can't find where liquidity is or can't find where buyers and sellers are easily. So price is going to be choppy and hard to follow. Pivots from our calculations are loose, meaning they overshoot, and breaks are more common. As you see today, we had breaks across the board. So the minute the market opens, you can go, man, all my signals are going to be bad. And then you know that, but the difference is our stuff will have a switch that turns things off. And immediately when the market opens, you go, things might break. And you can see that, right? Resilience and loses power and become just following the market instead of leading the market. Cause the irrational market a sudden or on the calendar, I'm saying that catalyst, an event. Cause a catalyst or unusual activity. Things like that. Other mechanisms such as margin calls, random explosive sudden volatility. These are all the things we measure. We have 5 indicators that flag a stock or the index is irrational. Any one that triggers is all it takes for us to immediately respond. It is stock, VIX, or the index is irrational. Okay, and that's it. So essentially you go into it knowing what you're going to expect. If you expect, VIX to bounce here, I'm sorry, if you're expecting the market to bounce while VIX is trading and hitting an irrational boundary, market's going to be crazy and not going to make any sense. And your technicals will just outright fail today. Where's my trade at? Again, my swings are here. 22,570 bucks today on my swings. Now again, after I made my 70K week 2 weeks ago, I started buying Google and Apple as they dipped and started piling into them. And then when the market finally hit a bottom, I started going into Qs really heavily. Okay. I'll just post a picture on the Discord of my P&L. Again, I have some drawdown this week, so I've completely overcome all the drawdown from this week. Let me post in the P&L. So in our P&L channel Discord, I'll just post so you guys can see it. So much easier to think your swim doesn't have like a nice reporting feature. We'll build one in our platform. Okay. P&L. I'm gonna post a picture of the P&L total. Oh wait, take a picture. Come on, Apple. Problem with my Apple, and Apple's a very small position, is because it expires very soon. Okay, let me post this picture. Oops. That's in the Rocket Scooter account. There's a 24, it's real. So my big positions in Apple, Google, and Qs are now starting to move. Like I said, I'm in extremely heavy on my thesis. So I made 70K that week. And I'll walk you through all the trades I did off of my thesis, okay? Let's do Google really quick. Let's do a monthly map. And we'll actually demonstrate monthly maps in the Zoom session. So everybody do me a favor. Go to the Rocket Scooter Discord really quick. Just make an account if you don't have Discord. You can join for free. one more second, guys. I'm talking to my tech team. Yeah, just a quick meeting with my team really quick. We're gonna address today's issues in today's meeting. Okay. All right. Back to what we're looking at. Google put wall 94th liquidity pocket. Yeah. Open your app this morning and saw the stick and knew it wasn't trading today because the rules education day. And even so, like when markets go irrational to the bull side, I'm always finding a way to be bullish no matter what. If the market gives me a bull signal, I'll take it. Even in a bear market, we did the candle count trick, which will actually show you that you have one day down and one day up in a bear market anyways. It's actually there. Okay, so I'll walk you through what I was doing last couple weeks, right? When the market dipped out, and I'll use JP Morgan as an example. Going into this week, October 17th is when I pinned, that's the bottom. The bottom was in right there. Before we had this flush day and rally, it was right here that I started loading up. I was buying Nvidia, Pepsi, Apple, SPY, and when the market dipped, I think that was the CPI last month, and whatever it was. When the market flushed and reversed, right at the dip of that day, I loaded up JP Morgan in the morning and let him run. If you guys remember, it was like 2 Fridays ago. I think it was here. Let me actually go back when I closed. It was 2 Fridays ago. So it would have been the 28th, maybe here. Yeah, it's probably here. I closed my JP Morgan here. That one had like 1100% gain. Like I literally wrote it right here. They were 120 puts, or sorry, 120 calls, and they went in the money, and they were just making some decent change. I closed out everything there with the exception of, I have to remember what I left open. Oh no, I switched modes. Then when we had Apple, Apple and Google, after we had those earnings, I started taking the gains from those and starting to buy like the shit from the event. So I think Apple, I didn't have a big position in Apple. I just got 30 calls. It was very moderate. I put like 3 grand into it. The Apple calls were for the monthly. I was actually betting on a run going into the monthly expiration. So they might not expire with any value, but they only lost like 3 grand. They were 160 November 18th calls, 30 of them. And again, when it didn't hit, I think I got in them before earnings. And when it didn't hit and started trading down, I was like, whatever. So I waited and I started buying Google and QQQ. And I gave my thesis was they were the worst looking things. So again, at the same time, I bought just 30 Google calls, something really small, for 110. So I was betting on the expected range to go to 110, and that's it. But I gave Google until December 9th to have that happen. So I got a lot of time for that to happen. When Google started falling, I started adding to my position, buying 100 Google calls for a similar point in time. So now I'm waiting for and my position is relatively very large. I mean, very, very large. So essentially I took almost all the gains that I made and I started loading up, not all the gains, but like all the gains with the intent to buy some of the shittiest looking things. Google and QQQ. I loaded up semi-heavily at the bottom for all of them as the market was falling. And so while it is somewhat aggressive, my QQQ is 310, which is really far. But again, I got till December to get there, which is not optimal to fill that gap. But what I'm going to do is when I hit my next QQQ resistance, I'm going to start trimming that position and building my position out a little longer in time. So now that I know, I'm going to do a quick monthly map to see what QQQ is going to look like over the month. So I can basically decide how I want to reposition. I got a little, and again, it could go there, but I don't want to bet that it goes there, right? I'm going to see if it will. So let's go ahead and map out Qs today. Let me just start moving some of these around. And we're trading right at about, what, 277. So you can see on the daily, which expires on Friday. Actually, I'm sorry, this is the daily. Oh, forget what I just said. The daily is today. We'll map out today, the expiration of Friday, and then the following Fridays coming up. So these darker ones are going to be matching the call side. So from here to 282.5, it's completely bullish on positional risk, right? Again, we're not a time or indicator based community platform, so time isn't matter. These are just bullish positions and that's it. So any time frame will do, which is the better part of what we do here, is having time independent analysis. So there's a jumbled up mess with resistance at 283 and 288. So let's just draw like both resistances there. Okay. Actually, let's just ignore the couple. So I'm looking for like the bigger split. So 288 is that highest zone. So we can ignore the choppiness in the middle and just put this right at 288. Okay. Now we're going to go to this single date mode and we're going to put in tomorrow's date. Map that split out. 267 and 265, super bullish, right? Starting tomorrow. This is going to see where I need to reposition my Google if I need, or my QQQ if I need to. And we will see. So 265 is bullish. Let's map out the next week. And monthly map will also be something that we'll be able to put in the platform coming up as we're making things little by little. 255 and 240. So the market split really good on the bull side, even until expiration. And you can see what it used to look like, where it was choppy, right? And now it's cleaned up. We got some hella good data points. Market's very liquid. I don't see a mechanism for it to sell off. And so I'm excited to see what I can see. 240 and 255. Okay. Come out even further. And again, this is no time analysis, no complicated confluence or craziness. We're just looking at numbers. 260 and 235 on this date. Next Friday. 260. 235. And I picked the hour chart just so I can see all the data in one spot. And let's just give it like one more date. 262 and 230. Okay, this is looking really good. So this is where I can look at how I want to reposition if I want to. Something just broke through monthly hedge for sure. Just keep an eyeball on that. So mapping out what I'm looking at is that QQQ is still bullish positioning all the way through here. So anytime QQQ falls below here before that date, I'm out. Anytime QQQ falls below here before that date, I'm out. So an example is, let me just draw it. All the maps are awesome. So QQQ rallies, 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 and we're good. And say that on this Tuesday, I map it out the same way. And Tuesday falls through here. Okay. This level is not bullish on any of that time frame. I'll be completely out of my position if that happens. You're projecting dates, you're using time. Oh yeah, but the difference is I'm not using time in the past. I'm using, yeah, I'm not saying that like what you did. Remember when you used to wear Jinkos in the 90s? The time in the past is the remember like those big baggy Jinko pants at a point in time were very popular, so it's going to imply they're going to be popular in the future. Ugh. Beanie Babies is using time in the past. This is telling me where people want to be bullish or bearish in the future. So this is looking into the future. It's like a crystal ball, except it's not really a crystal ball. It's just looking at options. Yeah. So technically using time, but none of this looks in the past. We use no historic data for this, which is the best part. So because the market has a split here, this is telling you where people want to be positioned at a point in time in the future. So anytime in this range, I'm going to redo the map every day, and Rocket Scooter will do the map every day as well when we get it done. If at any point in this week, this was the map and we break out of bull territory, I just close my position and I'm out. If anytime this week, if that is the map, we break below bull territory, I'm out. Anytime this week we break below bull territory, I'm out. And again, every day I'm going to remap it. So what's neat to see is that, pretend that all things are equal and that these maps don't change. Google can still, or QQQ could still do this, and I'm still buying the dip. So if over the course of the week, an example, we trade here, we trade here, we trade here, and there is an announcement or a data point that comes out, and we fall here and bounce. Right? And this was your map. And we're right there. Here's a trick. I want you guys to tell me, and then we'll close out the session and we'll go to Zoom, right? Oops. So again, we're trading, we're trading, we're trading. The market goes here. Not here, sorry. What do you think I would do right there? Let's say that I longed Qs right now for a swing. My first entry point, long QQQ. And over the course of the week, it did this. And on this day, this was the map. What would I do right here? Would I add to my position? Give me why. There's two reasons why I'd add to my position. Not only would I add to my position, but at least at what expiration date do I need to add to my position? You guys are on. Y'all get it. Are there videos in this? Yeah, this monthly map, Adrian, come in. We're going to go to Zoom in just a little bit, and we'll go over this. So go to the Discord, everybody, very quick, and join the Zoom call when I post this link. Probably about like a 30-minute break, and then we'll jump into the Zoom. In the Zoom call, we really go through and teach these things a lot. There's a ton of videos on this stuff too, small videos. Okay, I would add to my position why. Why would I add in my position right here? And actually, let me go ahead and draw that level over the course of time, just so you can see where that is. And I'm kind of doing this at exactly that spot to throw a curveball into it. Risk is still on your side, okay? But remember, options, we talk price and time. Better cost basis, right? But also, at this price right here, it's certainly bullish for this expiration, and it's certainly bullish for that expiration. Not necessarily bullish for that expiration. So if I'm going to buy an expiration that matters, it needs to be at least here or later, knowing that if I'm still here and trade lower right here, what would I do to my position? Say I bought the dip and market's moving here a little bit, and then on this day it falls to there, and that's the map. I bought again, we're here. And the map looks like this indefinitely, like it's like going up like that. What would I do here? I'd stop out. Or reposition. To say that last example, this is made up over here to the right. Let's say that I bought, I don't know what Friday this is. This is the 8th. Let's just say like December 9th, I think. Let's say that right here I bought December 9th, right? If that's December 9th, I don't really count. 18th. Let's just pretend whatever. Let's pretend that's December 9th. I bought December 9th. We fell. Market came here. I longed a whole lot more. My cost basis got really low. Maybe about 50, and then I bought 500, whatever, for December 9th. Okay. However, we're here. And in December 9th, tell me what's going on with my position for that expiration. Market's here at this day, and I have December 9th calls that I'm going to say I wanted 290 calls for the example. Okay. We're here. I need 290, and this is what December 9th looks like. It's a liquid. Not enough upside for the risk. What would I do if I still wanted 290 at this point in time? And I'm looking at December 9th, my expiration, right? Volatility is big, but in reality, if you fall through here, and the first step you guys are saying you would close your position, okay, but I'm still bullish fundamentally. I still want my 290 calls, but what am I going to do differently when this happens based on the map? This hypothetical map that I drew. Hedges, but nope. It's a trick question on purpose. I'm going to challenge you guys, I think. Sell puts? You could. But I want 290 calls. Like I just keep saying, I want to get 290 calls again. But on December 9th, tell me what happens in December 9th. First of all, right here. Compare where we are. Remember, this is a whole different way to think. That's why it's hard, but I'm challenging you guys to think. You guys are getting close. Start by telling me why you told me to close, and that'll give you the answer. All of you guys said close your positions here because this is my expiration. When I put this big giant X, this is where I'm expiring. Why? This is my strike and expiration right here, okay? Why here did you tell me to close that strike and expiration? I think there's a delay on YouTube. That's probably why it took forever. Answer the question of why you told me to stop. Just give me like the real reason, like the real. Just tell me like I'm stopping because of this is the reason, not Mark Mayer saying their faces. Yeah. But why? Not enough upside for the risk. You got to tell me numbers. Not going to get there in time. Remember, you're doing this analysis as a trader. When you're a broker, you're trying to put in an order. You're not going to put in not enough upside for the risk. Give me a number and a reason. Just like I'm closing because it fell below here because of this. Or fell above here because of this. Why would I close here? No. No. All right, good. We're going to have a lesson on this today. If this is my expiration and this is the bull side of the market, and I'm a bull, what am I going to do? And why? If this is my expiration and I'm not on the bull side of the market, there you go. Fell below the bull's side. I'm not in the bull market anymore on that expiration. Market's more liquid and choppy and volatile. I won't get there in time, which you guys are all right because y'all know the answer, but I want y'all to spell it out for the newbies here. Correct. We won't get there in time. And that's why. But as I was saying, tell me the real answer. He's correct. We won't get there in time. Likely. We have to break in the bull territory, which means I need a catalyst. What's a catalyst on QQQ between now and then? Ugh, I don't know, right? We can't really think of any. So if I were to close these options here, but I still want 290 calls, then what do I do? Again, the clue is the answer to the first question. What would I do if I still want 290 calls? I closed out the December 9th, as we decided, right? Right here, we're not in bull territory anymore. As a matter of fact, this week or this week, it's probably gonna be choppy. I'm gonna lose most of my position on theta loss and maybe IV crunch, right? So if this is the point in time, and I wanted 290 calls, roll out several weeks. Okay, because what happens several weeks? What happens here, hypothetically? Tell me about my position at least 1 week hot, 1 week further. Oops. You just nailed it. You're getting there. Tell me about this position 1 week later. Tell me about where 260 is on that Friday. Whatever I put it. Tell me about my position here. I'm in the bull zone. This is not bullish for that day, not bullish for that day, but bullish for that day. Bulls are becoming more bullish because they're willing to buy lower as price. They're willing to buy lower as time goes into the future. So this is, I just drew this here for the example. This is the real map. So bulls require a higher price to be bullish and require a higher price to be bullish. Or bears are going to stop out at a higher place because they're more comfortable being bearish. When this goes up, market is becoming less bullish. When this goes down, market is becoming more bullish. But the takeaway is that when you break from bear to bull side, is a very, very, very small probability that you leave this mean reversion and jump one side to the other. We don't bet that that happens. It can stay choppy and liquid. So in this example, my options position needs to expire on at least this date or later to get to the strike I want. And if I look for this to go from 260 to 290, it's a 30-point run. I will go back in time and see on a choppy run up is how long it takes to go 30 points, how many weeks. And if it takes 3 weeks, then I'm gonna double it and say I need at least 6 weeks. And is 6 weeks in bull territory? Yes, then it's bull. Now it's a lot of things to do manually, but and the map itself will allow you to plan your options trades just that way. Okay, so that's a great example. So what happens if we go here and instead I long, and I don't even know what this date is. Let's make up a date. This is going to be December 40th because there's no such thing as December 40th. But we're going to say December 40th. Actually, December 41st because I just turned 41. So pretend that this is some arbitrary random date in the future. And I long December 41st, 290 calls for that expiration. And we're here. All of a sudden, market falls. Remember, I was in the December 9th and I said, ugh, I'm going to get out of my December 9th. But right here, I'm going to roll immediately into 290 calls for this date. Okay. And all of a sudden, the market falls right here and is good. I closed out my position. I extended the date further, and now we're here. What do you think I would do? We fell 5 points in Qs. Last part. We're get out of here and go to Zoom. If you guys join Rocket Scooter really quick and you guys want to join this is one thing. Put in this code, okay? That code right there. Our $200 subscription is $100 a month. For the rest of your life, every month, if you're our first 1,000 members. You can grandfather it in. You can give it away to a friend, whatever you want. But if you want to lock it in, we're doing like the thing that my gym does. If you get your first 1,000 people, y'all can be in at such a really ridiculously low price. We will teach you guys this today. But the idea is you're supporting development of the platform. Our developers, obviously we pay them. So you supporting them supports us. We love that you guys do that. But you can be the highest version of what we have, all the data feeds, all the features, all the stuff we're building, turning on in our platform for no additional charge. So the final version of the platform might be like $300 a month. When you add every data feed to it, you will be $100 forever. That's the benefit. If you guys want to check it out, you waste more money eating sushi one night or that gym that you don't go to. So Black Friday monthly at the monthly membership, check it out. You're still bullish on monthly map. Yeah, I'm still bullish on my date. I'm good. And say that that's all I can measure, right? And say that we fall below 250. Then what would I do? You guys are starting to get it. I love it. It's a different concept, but when you're planning out your options over time, this is exactly how you do it. So what happens if I fall right here? Last example before I get out of here. So you guys ever knew that the hardest part of trading options is picking the time? This is how you do that. This is how you swing trade options. I'm going to give you guys the best swing trading options lesson I can think of in 20 minutes. I'm going to go to Zoom. Sam, auto depth. I didn't see your question. Sorry. The setting manual to 0 skew results. I'm looking at going for Goog for 25th. Could you explain manual settings briefly? In the Zoom call, I'll talk about that. What would I do right here? And we'll call it quits for the day. What would I do right there? Remember, I bought December 9th 290s. I decided I'm going to get out and roll it to whatever. I made up a date, 41st of December. And all of a sudden, market's falling. You guys said hold. That's correct. And the market falls to there on my expiration date. What would I do? We are right here on the trade. I need to go to the bull side, 290 on this date. And where am I at again? On this Wednesday, that's what Friday looks like. I would close out everything as well. And then I wouldn't do anything else until I had confirmation of what I wanted to see. So either I would close out, or let's go a little more complicated. If the market is in this mean reverting territory, it doesn't mean that it's bearish. It just means it's not bullish. And when you want to buy a call, it's not that you are bullish or bearish. It's you're saying how the market's going to get there. If I long a call, let's show the two examples. If I long a call and I short a put, those are both bull positions, right? If I long a call, the market goes like that, I'm going to make the most money. If the market goes like that, I'm going to make less money. More, less. It's actually how it gets there. This is going to burn a little more theta on the way. This will just gain that value really quickly. So you might have IV loss and things like that from the volatility, but the way that it gets there is also important to which side you take. Shorting a put means I'm betting the market doesn't go down. This will make more money on my shorting of the puts. This will lose on the shorting of the put. So how it gets there is going to decide which side of the trade I want to be on. So mean reversion, or in between put and call walls, is relatively choppy. That's choppier, that's choppier, and that's choppier. So I know that if I'm in mean reversion and I'm long the market, and maybe I don't want to just stop out the entire position, but maybe I want to hedge it a little bit. Then if this is where we are, and the distance between, and this is the moment it happened, 260 and 230 is 30 points, right? So I will subtract 30 points in the bear territory. And from here, again, at that same point in time, I will check that the market is still in mean reversion here. Okay, good, check. So I will sell 200 puts outside of this band as well, if I wanted to be bullish. I mean, sorry, bullish, but it's volatile. If I close this out, I can sell those puts and then bet that the choppy market happens instead of the bull market. That's not a hedge. That's another bull position. If I wanted to hedge and make a little cash, I can always sell calls in the same light. If this is 30 points at 260, I have 290 calls that I already bought back here for that expiration. I can do what's called a diagonal spread. I bought calls and I can sell calls to pay for them. I know that in here, it's choppy all the way around. So maybe at this particular point in time, if I wanted to break 250 to go to 290, then I can take the hedge that says if it doesn't break 250, then I don't get those calls. Then I'm also going to sell 250 calls for that exact same date. And that's the trick. What kind of trade is this? So example is if the market just stays right here and doesn't break into 250, then those calls made money every day that it hasn't moved. The minute I break through 250, I can close those out. I'm in my 290s. If it doesn't break into the bull territory I need it to, then this makes bank and that loses bank. As long as I establish a net credit, then I made money on the trade. It's called this is selling. Sorry, this is buying a vertical credit spread. Because the short side is at the bottom. It's called credit spread, correct. So now, I know with all this nonsense on the chart, let me delete all this. Again, the method was market falls to here, and I'm like, okay, let me buy 290 calls here. Okay, perfect. And all of a sudden, market falls to there. Crap, we're in choppy, volatile territory. Not bull, not bear. This is not bull or bear. And that's how Rocket Scooter works. So not bull or bear. I can play any game I want. I can sell puts down here, which again is doubling the call. Doubling the long bet. It's doubling down. Not really a fan of that. But I can also at any point in time say that this is the moment that this happens. And I recognize this. I can even sell, I can do what's called a diagonal spread, and I can actually sell calls here or here on these expiration dates. What I like to do is I like to take the distance between the two, here and here. And I will sell out of the money that expected volatility one layer higher. Because, I mean, hell, if this goes to here, then I'm practically in the money. But so what I'm going to do is I'm going to take 260 plus that distance of, this is the volatility, and this is another trick to do. Then I will add 30 to here, and actually, coincidentally, it's 290 as well. So as the market's bouncing between here, I will sell 290 calls for this date. In this week, I'll do the same thing, sell 290 calls against my position. Or whatever, actually, no, sorry. This is 230 to 265, a little bit more. I might sell them way out of the money. So the idea is that the probability that we break into bull territory is low and then climb is even lower. So if I sell the volatility plus the edge of the bull side, it's very conservative. So if it goes there, then hell yeah, my out of the money calls are going to make money. But also I will stop out the minute we break into the bull side. I will close out the sold calls. The minute we broke through here, I close out those calls as well. And then my bull position will take out. Do we all understand how that works? Okay, I'm going to get off of YouTube. Let's go to Zoom. We will detail this further. Timing options is all the importance. And I will show you guys why I picked what I picked in Google, Apple, and Q's. Let's get on over there. Okay. Join us in our Zoom. I will post the Discord link here. You guys have a 10-minute break, and we're going to go straight over there. Go through the steps. Join the Discord. See you all in a minute. We're 50% off for life. Be in our initial 1,000-member group. And you guys will get all those perks with that. Love you guys. See you in a minute. Go to the Discord.